Jai Hind and welcome to Team MED The Futurist. And today's update is on how India is using, or I can say leveraging, this opportunity of tensions between China and United States. Now, before we proceed, subscribe to our channel and do hit the like button. Now, India is inviting American companies to move their factories from China to India. Now, this comes as the United States and China are having trade tensions with high tariffs, taxes on imports, making it costly for companies to produce goods in China and sell them in the United States. Now, India sees this as a chance to grow its own economy. Now, the Indian government is certainly offering incentives like tax breaks and support to make it easier for companies to set up factories. Now, big companies like Apple are already making more iPhones in India, and others they might follow. India hope to become a major manufacturing hub, but challenges like finding skilled workers and building supply chain will remain. Now, the United States and China, they are in a trade war, raising taxes on goods they trade with each other. Now, this certainly makes it expensive for American companies to make products in China. India is stepping in the middle saying, come make your products here instead. So, India has lower trade taxes with the United States, a growing tactics, or rather, a growing market, and a government is eager to help with money and even resources. So, for example, Apple now makes 1 in 5 iPhones in India, and other companies might do the same. So, however, India needs to train more workers and improve its factories to handle big production. Some worry that India might not be able to ready for this huge shift, and a global economic slowdown could hurt everyone, including India. Still, India sees this as a big opportunity to grow stronger. Now, why it matters? This could help American companies save money and keep prices lower for customers. For example, for India it means more jobs and a chance to become a global manufacturing powerhouse and partnership with United States. But it's a complex process. It's not going to be that simple, and success depends on how well India can prepare and how the United States and China trade war evolves. Then manufacturing sectors and supply chains, when we talk about India, the diverse including electronics, example 14% of global iPhones, pharmaceuticals, automotive, aerospace and textiles, growing high-tech focus with companies like Boeing and GE is expanding. And supply chain is developing but less maturing than Vietnam's. So local raw materials, example metal, reduce cost, but electronics supply chain rely on imports. So platforms in Vietnam are there certainly improving supplier networks. Then when we talk about FDI, $70 billion annually, but only 30% goes to the manufacturing. Whereas in Vietnam, the sectors are they focused on electronics, example Apple, iPads, Samsung's phones, textiles, footwear and furniture. Established hub for consumer electronics with 25 Apple suppliers versus India has got 9. So when we talk about the Vietnam supply chain, it's mature, especially for electronics due to Chinese investments and again proximity to China. Northeastern Vietnam is a tightly integrated manufacturing cluster. And when we talk about the FDI, $25 billion in 2024 with 60% for manufacturing, outspacing India's per capita manufacturing FDI has been there. So this was the kind of comparison between Vietnam and Indian manufacturing industry. And when we talk about the key differences, Vietnam dominates in electronics with a ready supply chain. India's broader sector range and growing high-tech presence offer more flexibility but need supply chain investment. Then what is the market access and exports? India exports 75.65 billion US dollars in 2023, growing electronics exports to United States up from 2.6 billion to 6.6 billion. That's January to September 2022-2023. Large domestic market 1.4 billion consumer reduces export reliance. When we talk about trade, lower United States tariffs than China but higher than Vietnam for electronics. So strategic locations aids access to these non-Asian markets. And when we talk about Vietnam, the exports 96.99 billion dollars in 2023, led by electronics and textiles, and strong United States trade ties via low tariff agreements like CPTPP. Then when we see the trade, ASEAN membership and coastal access ensure fast, cost-effective exports to global market in case of Vietnam. So what is the key difference between Vietnam's export-driven economy and trade agreements give it an edge for United States? Market access. India's domestic market is a bigger draw but less export focused. What are the risks and the scalability measures in both the countries that US would like to maybe assess? India risks are weak infrastructure, high tariffs and bureaucratic delays, slow investment. Then the regional policy variations, it certainly adds the complexity. Then the scalability, when we talk about unmatched due to population size and diverse industries, but skill and supply chain gaps need to be addressed. When we see the Vietnam, the risks are limited labor pool restricts growth, authoritarian governance and weak IP enforcement, it poses long-term concerns. Then reliance on Chinese suppliers is again a big major vulnerability and a cause for US to think. Scalability is constrained by population and workforce size, especially for large or unique projects. So when we talk about the again key differences, India's scale is a major advantage but execution lags. Vietnam scales well for electronics but hits limit for broader industries. Let's also see the real world examples. India, Apple's iPhone production 14 billion in the year 2023-24, 1 in 7 iPhones globally, Foxconn, and Tata expand operations. Then GE and Honeywell leverages India's aerospace skills. Vietnam, Apple products, iPads, AirPods and Apple watches with 25 suppliers. Samsung makes half its smartphones here. Nike and Intel also have major operations. So India versus Vietnam, which is better for American companies? India is better. If you need a large scalable workforce for diverse sectors, example electronics, pharmaceuticals and aerospace. So you value a democratic system and a massive domestic market for long-term growth and even in expansion. And certainly one can think, United States can even think that they can invest in training and supply chain developments to overcome the infrastructural gaps in India. Then it is best for companies like Apple expanding iPhone production or Boeing aerospace manufacturing, which is already prevailing. Vietnam can be suitable for United States if they focus on electronics, textiles or footwear with established supply chains and export needs. So they prioritize low costs, fast logistics and trade agreement benefits for quick market access when we talk about Vietnam. You're okay with a smaller labor pool and potential political risks in Vietnam. So best again for companies like Samsung smartphones or Apple AirPods and iPads. So what is the simplified takeaway? Vietnam cheaper, faster and better for electronics and exports due to strong infrastructure, low tariffs and proximity to China. limited by workforce size and political risks. And when they focus for India, certainly larger, more diverse, and ideal for long term high tech manufacturing with a huge domestic market, very much potential for scalability, held back by infrastructural and bureaucracy, but certainly catching up. So, what are the recommendations? Personally, if I feel for immediate cost effective production, especially electronics, they can or they might choose Vietnam. But when we talk about long term, scalable, sustainable, diverse manufacturing, India is the strongest bet. India is the sustainable choice, especially as its infrastructure is improving. Companies should align their choice with industry needs, timeline, and even risk tolerance. That's all from us, from our side in this story. Do let us know what are your thoughts in this in our comment section. Jai Hind and Jai Bharat.